Good day, everyone. It's Dr. K and Gil Morales at the webinar. And we see today that the economic news, actually over the last couple of days, has been quite strong in China and in Europe. So the question is whether these countries can indeed turn the corner, since Europe has been mired in recession for the last couple of years. And if they can actually get back on their feet, then it won't be long before the U.S. also starts to see economic reports that are more upbeat, since all these countries are fairly well connected. And at the present time, we have some negatives on the horizon. That is the large number of distribution days seen in the NASDAQ and S&P, especially the NASDAQ. And we also see that institutional money has been selling the rallies intraday. And then we also have this Hindenburg-Omen signal. But its last two signals, there was one earlier this year in May, and then also one in 2012, and both of those have been false. So I think despite the Hindenburg-Omen's excellent track record, quantitative easing has definitely thrown the signal askew, as it has many other types of tried and true indicators that were very reliable up until 2009, when quantitative easing began. But nevertheless, we always focus on the price volume action of major indices and leading stocks. And right now, it's the market, I think, is having a tough time figuring out which way it wants to go. The S&P 500's been trading more or less sideways over the last 4 weeks. And I think that speaks to the tug-of-war between quantitative easing, which is on full measure, which helps the market find its lows every intraday. In fact, today we were talking about the possibility of the model going on a sell signal, because the market was coming off pretty fast the first hour and a half of trade. And then it looked as if, from prior days' experience, this is where the market's going to find its low, because QE then comes in and pushes the market higher on low volume. And then so it seems like a broken record of what's happened in the days prior. But that said, the averages can't seem to really find a definitive direction at the moment, because while QE is on full, the markets are forward-looking, and it seems like there's been more consensus at the Fed to taper quantitative easing as early as September. And so, in other words, since the markets are forward-looking, in a way they do our thinking for us. If the markets are going to head lower here, then that's our answer, that the Fed's probably going to taper in September. But if the market continues its uptrend, which really started at the end of June, then that's our answer as well. That telegraphs to us that perhaps the Fed is going to maintain its dovish stance and not taper QE until maybe 2 or 3 or 4 meetings ahead. So we, in other words, have a few more months of full quantitative easing, which should prop the markets higher. And leading stocks, action in leading stocks has been better than it had been before. I mean, we have a number of names like Tesla and Priceline, LinkedIn, Facebook, Amazon, and a smattering of smaller names that have been doing fairly well, maintaining their uptrends, although it's not an easy market, because a lot of these names have also, for every 3 steps forward, sometimes they take 2.5 steps back, which is just enough to cause one to downsize or sell their position outright. But at any rate, Gil, did you want to have anything to add?
No, I have nothing to add. The webinar is now over. No, just kidding. Well, I mean, you see things slowing down a bit, and I think, let's take a look at something over here. This is the NYSE Advanced Decline line. You can see, once we peaked out here, the S&P has more or less been going sideways. Let me see here. Yeah, pretty much going sideways, and as we were making highs last week, new highs, the advanced decline was coming off, and it's been making lower lows. So you're seeing this divergence in breadth. So you're seeing breadth start to taper off, no pun intended, and it's not really confirming the higher highs in the S&P 500. That said, if the indexes can hang in here, maybe breadth will turn around and this will spark another move to the upside in the indexes. It's a little more concerted. But right now we are on a neutral signal, right, Dr. K? And what would cause that to change? I'm just curious.
Well, essentially an acceleration of selling in the major averages and the in leading stocks. Although I'd like to say that, because of quantitative easing, when market averages are off their peak by 5% or more, then as we've seen, QE often steps in, and that's where the market finds its low. So knowing this, the model is either going to sit longer than it normally would. As we've said before, it would sit longer, but what I'd rather have things show are that the model goes to a sell signal when the major averages are within, say, 3% of their peak. That way, even if the signal's wrong, there's less money is lost, and the model can go back to a cash or revert to a buy signal. So right now, it shows the S&P 500 is less than 1% off its high, so there's still some cushion for the market to move and to show that it's accelerating to the downside. So that would cause a sell signal in the model. And as far as weak rallies, that will, if anything, a weak rally would actually potentially push the model back into a buy, because that's the kind of rallies we've been seeing, where market averages tiptoe higher over a period of days to weeks, which of course is frustrating to a lot of people, because we like to see definitive action. We like to see a full-blown follow-through day before we start going along the market again. But this is a QE market, so we have to be cognizant that we're not going to necessarily get that kind of follow-through day.
I just also put up the NASDAQ advanced decline line. You can see that's kind of chopping around and showing some divergence from the NASDAQ moving to new highs. So, even though you do have some stocks going bonkers, and usually that's because of Bible gap up type moves after earnings, it's not that as broad as it has been. And so you're seeing this sort of choppy action. Back in May, we started to see that, and that led to a further correction. So I'm wondering whether this is going to lead to further correction. I think that's one of the reasons that the market direction model has gone to a neutral signal. And I agree with the idea, Dr. K, of being more proactive in terms of catching these moves earlier and reacting to them more quickly, because I think in this market, in the QE market, these sorts of quick swings, breakdowns, and rallies, the market always finds its feet when the market's down 5-6%. I think the last correction was a little over 7%. And when things are looking quite ugly, that's when QE has come in. Now the question is, if the Fed tapers, they announced some tapering in September, do you anticipate, Dr. K, that the market will sell off hard, or do you think it will discount that it will know in advance and it will discount that prior to it actually occurring?
I think it really remains as to how aggressive the tapering is that will determine. And I think Bernanke is aware of that, so he doesn't want to upset the economy, which is very fragile, in a very fragile state. So I think if any tapering does occur, it's going to be gentle, and so the markets could absorb that information and perhaps, well, that's the question. I don't anticipate a massive sell-off or a crash, because Bernanke's full aware of what he's capable of, but it would be nice to see a trend in either direction. Of course, a tug of war that's so evenly balanced that you get just a more sideways slop is really not very friendly to investors. So, but we'll have to see. We won't know until we're there. And
right.
What's nice about sideways markets, however, is that you can still get your occasional Tesla that just completely bucks the trend.
Well, I would say right now Tesla's not really going anywhere after the Bible gap up. You kind of stalled around. We did note that here's your 200-day down here at 61.18. You are 150% beyond that at this point. And I think some people have mentioned and asked about O'Neill's sell rule, I think, which is 70% above the 200-day moving average. So this is more than twice that amount above the 200-day. So you have to wonder whether it's going to have the same kind of upside push and, as I like to call it, afterburn as the prior one back in May. And so far it isn't, but you know, may just continue to go sideways. Okay, you had mentioned
I don't
that
know if
in
that. I mean, Bill has traded certain stocks where they were certainly more than 70%
yeah,
above
that's true. You can see
100, and
that
I mean that's
in the
some of his
old model books.
biggest killings are actually in those kinds of stocks. So I think that 70% number is just applies to majority of stocks, but some of the key stocks on which he's made fortunes, you know, he'll let them run well past 70%, if not well past 150%. You know, the birth control drug in the 60s, where that put him on the map. I
Syntax,
mean,
right.
yeah, that had a number of occasions where it was well above the 200-day.
Right. So, you know, it's trying to hang in here, but I've noticed a lot of these Bible gap ups lately have not really gone anywhere. They tend to just hang out for a period of time, and you're not really seeing the same kind of afterburn, so to speak, that you were seeing in a lot of the Bible gap ups earlier in the year, particularly, say, in January and May. Even LinkedIn is sort of floundering around here. 5 days going sideways. Volume is drying up. You know, it looks like it's maybe setting to go higher. One way to play this would be to hang out and see if it breaks through the top of this, and that could be another buy signal. I was noticing on the weekly, you got to keep an eye on these. Maybe this is a short stroke. I don't know. Another one that looks like this is Fleet Core, which had a big move. You know, it's had a big upside bar. This week, volume's drying up, and it's holding in a pretty tight range. So I think we'll see what happens here. But some of these could pull in. There have been some other Bible gap ups. You know, Lumina kind of gave it up a little bit. We saw Trulia, volatile stock, run up, and it's kind of floundering along the lows of that Bible gap up day last week. Yelp also had a huge move, ran up, and you know, this is very tradable right off the bat. You could have made a nice 15-20% on this real quick if you'd even just bought here. But now it's coming all the way back in. Do you come in and buy it here? You know, I guess you could try it here because you are close to the intraday low of the Bible gap up day. So you're trading 51.44 right now. The low there is 49.22. So you're about $2, about 4%, a little over that, away from that. So it's within a reasonable area, but it is volatile stock, and it has had a pretty decent move so far. You've gone from a breakout area of around, I'm going to say your breakout was around here, 32, 33, and running up to 60, so almost a double in, what, 1, 2, 3, 4, 5, 6, 7 weeks, roughly. So that thing's pumping along, and maybe it takes some time. Maybe it heads back to the highs. Maybe it's a decent trade from here. I don't know. But that's what you're seeing on a lot of these Bible gap ups. There's not a lot of upside afterburn. Even Double L Lumber Liquidators, you know, had a Bible gap up, came in, little flip out here, runs up, and now it's just pulling back in. Dr. K, some people have asked whether you think this one's had, based on your 6-week rule, this one's probably not gonna work. What's your take?
Based on you're talking about the 6-day rule?
It's not a 6-day rule. Sorry, 6-week rule. Right.
Well, it looks to me. I mean, it low is 91.53, and you know, it undercut that 2 days ago. So you know, you could have sold it 2 days ago on that basis. Right. And yeah, it seems a bit slow here, sluggish to get going. But if you're still sitting the position, I mean, you could, and you don't need the capital, you could still sit in this because you know your exit point. Your exit point being let's see, less than your exit point's about 2.5% away from where it's trading. So it's not a whole lot.
So then, what would your exit point be? The low this day here, the second day following the Bible gap up?
Well, if you wanted to be really generous, you could do that. I would just revert back to the low of the Bible gap up day. So if it hits, say, 91.
So that's 91.53. You're trading 93.81. Okay, I gotcha.
So it's about 2.5% you get back. If you're willing to do that, then you can sit in it from here. Because you know, the overall uptrend seems intact, and the fundamentals are good, and so you know, it's nothing wrong with sitting in it with that kind of risk.
Okay, so you think that's okay. And most of these are like that. They're not really going anywhere. I suppose whether they succeed or not is going to largely depend on the state of the general market. So, and I'm just going to we'll go through a little tour here of what's going on. Everybody's asking about gold. Uh, you've got this rally. That is the nearest gold futures contract. Interestingly, the market's down today, and gold is up a couple of bucks. It was up, I think, 16 or 18 bucks yesterday. Let's see. Uh, Something like that, yeah. And so you're moving higher on days where the market's been weak. And so if tapering is going to occur, I would expect that would probably engender a sell-off in the precious metals. And you're not seeing that, you know. So you're even seeing silver is trying to come up off its lows. I also notice crude oil still hanging out after this breakout here. Here's a weekly chart of the crude oil contract. And it's hanging out, pulled back to the 10-week line, and so these commodities seem to be holding up, which might argue for less tapering. But meanwhile, stocks are weak, and I'm wondering if there's some sort of confusion between whether, you know, if tapering is going to occur. Maybe they go ahead and taper. You know, some of these Fed heads have been saying that it doesn't really help economic growth. There's no proof that it brings on more jobs growth or helps to foster that along, and generally boosts the economy. In a way, it's propping everything up, and so I think they're trying to start to find a way to back out of this. You know, I even heard one Fed head or read one Fed head saying that it distorts the markets and they need to let the markets do what they're going to do. So I don't know, what that implies. I guess we'll find out when we see it, and then you'll get to see how the market reacts to a tapering or an announcement of a tapering once it gets a sense of the pace of the tapering itself. So, but interesting to note that gold is, let's look at the GLD, for example, which to me has a little bit of a sentiment factor in there too, because when you see this moving on heavy volume, it tells you that people are getting excited about gold again. But it's basically holding along the 50-day moving average. So for those of you who are asking whether we would take a shot at gold here, I don't think there's really any reason to take a shot because you don't have any clear buy signals. If we got some sort of a big volume bottom fishing type pocket pivot, maybe you could come after it, because it would define a stop at the 50-day moving average. So that could work if you've got a hankering to buy gold. I personally don't until I start to see some sort of a more concerted turnaround here, because you're basically, here's the weekly chart of gold, and you basically have been in free fall, or the GLD has been in a free fall. It's getting back above the 10-week line, but there's no real massive volume to tell you that you're getting any kind of support here. So it's still very premature, but I would say it's interesting to note that the precious metals are up today when stocks are down, and they've actually been holding up reasonably well since late June when they bottomed out with the market. And you're also seeing the dollar. Where's our dollar here? Right here. Dollar's making new lows and has been. Today it's trying to bounce. Somebody was saying this is a good thing today, and I don't really see much of a bounce in the dollar. But what is that also telling you about tapering? I mean, if there's going to be tapering, wouldn't you think that would shore up the dollar? Dr. K, do you see anything here that is telling, or do you just think this is all just cross currents that don't really serve to give you any clear picture here, other than to go neutral?
Yeah, exactly. I mean, there's a lot of cross currents, and there's a lot of noise in the pattern, and it doesn't seem like there's any definitive trend up or down at this point. So, and that speaks to the nature of how many cross currents there are where we're at right now.
Right. So so it's something of a difficult period right now, and with some stocks acting pretty well and the broader market sort of drifting off here, I think going to a neutral signal makes sense. Let's see. Some of the stocks, acting well today. I don't know what's going on with this data today, but this thing's going bonkers. It's had a viable gap up. Let's see. Tableau Software. Is that a French company? And am I pronouncing that right, Dr. K?
Yeah, Tableau Software.
Would you buy this thing on a viable gap up?
Well, it's thin, it's an IPO, and it's got negative earnings. It's got a lot of issues. with it. So I think
Yeah.
that I would rather not buy this one. I want to wait for it to heal some of these problems it's got.
I like this one I'm watching this morning, Renewable Energy Group. They're, I think, renewable biofuels, and you had a pocket pivot here. It's kind of a funky, thin stock, and pocket pivoting again today to new highs. Here's what the weekly chart looks like. You got a nice base. It's been stalling here, though, on higher volume in these 2 weeks, but now we're starting to move out. I'm not sure what's driving this because they don't have the greatest fundamentals on the planet, negative 46% earnings last quarter, but they're looking for a 349% pop of 60 cents next quarter. So, and also this year, the company's looking to earn $2.92 a share. That's up 284% from 2012 when they made 76 cents a share. So, kind of an interesting name here. And so, getting a little pocket pivot breakout today. I don't know if that's going to work, but I just thought I'd bring that up because it hit my radar screen. Just going down my list, the solar's getting chopped up, spewer gapping down through the 50-day moving average, hasn't violated it. But, you know, this is some testament to what this market does. You run up, I mean, this thing's up from here 30%, you know, from this pocket pivot, and then runs up and then gets another pocket pivot and blows up on earnings. And just round trips, you know, that's another round trip. So one of the things I've observed in this market is that if you're using a pyramiding strategy, so you know you buy here and then you buy the breakout and then you buy here again, and you're adding to your position. By the time you get into a nice big fat position here, boom, they whack you, and in a matter of a few days, 5 to be exact, you're probably underwater on the position. And I think this is testimony to how difficult this market is. I know there are some people who are doing well. If you're in the right stocks and heavily concentrated, I think you're doing pretty well, or you have the right mix of stocks, and you haven't been averaging up too much. But if you're running a pyramiding strategy and trying to run several positions, it's a little bit tricky, and it's ponderous at times the way some of these things break out. You know, there's another one. Proto Labs was looking pretty strong to me. Had big support after earnings, and it closed just above the 10-day moving average. And then broke out, and it's breaking out on Monday on pretty strong volume, and then on Tuesday it just gaps down, and I'm not sure. I looked around for news, I didn't see anything, and the thing just comes right back in. Now it's bouncing, but a number of the 3D names have had some trouble. 3D systems trying to bounce around, you know, undercuts these lows, and now it's drifting back up into the 10-day moving average. But to me, this thing looks like it's probably just perhaps building a base. Maybe it'll show some support this week on the weekly chart and close tight. You know, maybe it's trying to set up again. I know Stratasys, we pointed that one out as a pocket pivot, and somebody was pointing out that the relative strength was only 65. But I would point out that, you know, on the day of a move like this, when the stock's been acting sloppy, and then you have a strong day like this, the relative strength number needs to be recalculated. So IBD will recalculate it, and the new one will come out the next day, or that night. And so, you know, now it's 83, and the line is actually making a higher high. It's not an all-time high, but it is making a higher high, so it is confirming that to some extent here as it pulls back right on top of the base. Dr. K, would you buy this thing here? You think this is viable?
Well, you know, yesterday it did have a bona fide pocket pivot. Now it's retracing on lower volume relative to yesterday. So, you know, I think it's still in play. You know, you've got XONE and DDD, Triple D, that look okay as well. I mean, Triple D is not breaking down. It looks like it's in its base, and it could very well break out of that formation. XONE has a formation that's wedging, but nevertheless, it's overall had a very powerful move. So overall, the group still looks intact.
Yeah, and they're hanging in there.
So rank is 9. So that also bodes well. And yeah, SSYS, the sales has accelerated strongly to 116% in the most recent quarter. And institutional sponsorship continues to grow in this thing over many quarters.
They come out with earnings next week, so I think I'll be in the hospital when that happens. So I'm going to miss it. X1.
Okay.
I think it's the 13th or the 14th. Somebody's asking about, hey, Gil, regarding the OMG BGU on Priceline. Are you shorting Priceline just to grab intraday Skrilla? Well, if you look at it, you had the gap up this morning, and then you immediately had a 620 sell signal here, so you could have shorted and scalped, you know, about 15 bucks. And now it's turning back the other way, so that would be a cover. So you'd scalp your Skrilla, I guess, and that would be that. But you know, I don't know. I don't get that impressed with Priceline. So it looked to me, it looked like it was shortable short term for a scalp. So you know, you can short a couple thousand shares, make your lunch money, I suppose. Anyways, moving along with the solars. Okay, let's continue that because this is a group that's really getting hammered. You know, I'm looking at Solar City as a potential. So somebody's asking about short sale setup. This could be a late stage base failure. I don't know how late stage it is. I guess maybe 1, 2, 3. I don't know. Maybe this is a 4-stage base, depending on whether you call these flags or bases. There's a flat base here. Here's another base. So a flag, flat base, another base, kind of a cup with handle here. So 3 bases here. I don't know. Maybe this is a 4-stage one. And maybe it's got some problems if it can't get above the 50-day moving average. So this might be a short here if you can borrow it. I was trying to borrow it, but no go on that one. So it's not borrowable. So the media, though, is in love with Elon Musk now. If you all recall, the Barron's ran a negative article on Tesla back when it was around 90 bucks, going on. And of course, as we know, Barron's doesn't really have a clue, and you're wasting your time if you read that rag, as far as I'm concerned. But now the media loves Elon, and while they point out Tesla, they don't really point out what's going on with Solar City, which you could change the word city to another word, and that might better describe the price action here. But you know, that's looking to me like a late stage base failure, or at least a base failure that could be shorted. Okay, so you guys asking about short sale setups. First Solar is another one. I saw this kind of as a shortable gap down type move. There's another cheesy base. That base, you know, by the time it's breaking down below the 50-day, and it's not looking right to me, and you get a, in fact, I think last week I was telling you guys I was shorting this thing, and you can check the video on that one, and it broke down, and you gapped down, you undercut this low, so that sets up a little bit of an undercut and rally. I would watch, if it rallies into the high here, which is 42.25, that might be a spot to short the stock. And of course, that sort of thing is going to be helped along by the market breaking down more. So, you know, if we see the market breaking down in a more concerted fashion, and say we go to an MDN sell signal, then I think some of these shorts will work. The other one that we've been looking at is ARM Holdings, and this is pretty much a classic pattern. You know, this head and shoulders. This is almost too classic. Maybe that's why it's not working, because just a little bit too classic and maybe a little too obvious. But this is a sort of ugly, you know, it's leaning over, and you got this big ugly break off the peak. Could have also been viewed as a base failure here, and oftentimes a head and shoulders develops that way, where initially the stock, you have a breakout, and in this base forms a left shoulder, and then the breakout and push into new high ground forms a head, and then you break down off the peak, forming the right side of the head, and as it continues lower through the 50-day moving average, this whole thing creates the whole head formation and the sort of lean-to, as it leans over to the right, setup and look of the pattern. And so you have the saying right here, possibly could have been shorted here as a late-stage base failure. And so I think in this environment here, let's say if the market is topping, which you don't know for sure, but you're going to watch some of these patterns. You start to see some breakdowns in stocks that are breaking down initially, and the market's moving in the wrong direction as well in terms of going into a short-term correction or whatever. These things will tend to work better, and they'll be your first stocks breaking down and coming off. So, you know, this thing right now, you notice it gets support at the 65-day exponential, which is this black line, but you do get resistance at the 50-day. So it's possible this thing could streak lower from here, and if you can borrow it, you could give it a shot using the 50-day moving average as, which I think is what, 39.31 right now. You could use that as your stop. But keep in mind, Solar City is a squirrely stock. Somebody wants you, Dr. K, to reiterate your 6-day rule.
Okay, after the gap up day, then you count 6 days from that day. If on the 6th day it undercuts the low of the gap up day by any amount, you sell it.
What about the 7th day?
7th, 8th, 9th, 6th day and on.
Yeah. So this one you would have sold.
Right.
Yeah. So that kind of illustrates it. So that's what I'm saying. Watch some of these, like LinkedIn. You see, like 5 days now. Monday's going to be the 6th day, and if it fails, Tesla, maybe not such a problem right now. It's only 1 day. But just watch how some of these act, because I'm just noticing that some of these gap ups, they don't really get any afterburn, and it's not like it was in May. So I just be careful, and I think we did counsel, take a small position if you're going to come into Tesla at this price. But I personally, I'm not buying it, so I made my money on it, and I'm not gonna really worry about it at this point. Some other names, let's see, Lock. LifeLock, here's Bible gap up, and you're 6 days afterwards, and it's going nowhere. So there you have it. If it undercuts the low here, then maybe you're gone, based on the 6-day rule. POWR, I was noticing this one. Kind of a thin. Here's a gap up. It's not going anywhere. It's a teenage stock. It's thin. Trades 100 and well, actually, let's see. What does it trade here? It trades about 279,000 a day. So it's a thin stock. It's a little tiny stock. Not something I would play with. But notice you get a Bible gap up supposedly, and it's not going anywhere. We did not report on this because we didn't think it was really that great. Somebody's asking, is the Fed just jawboning the market to do the dirty work for them? What is, I don't know, the market's not going to stop QE, so the market's not going to do that work for them. Not like they can keep QE going and the market's going to sell off and bonds are going to sell off. I think the mechanics of that all imply that sellers will get ahead of any tapering and anticipate it, and that's why the market really is your best forward indicator when it comes to determining the outcome of any potential tapering and when that's going to occur and the magnitude, etc. So, let's see, CLF, is that Cliffs? The old Cliffs drilling has been acting well. Well, it's bouncing off of its lows. Here's this thing in a big ugly downtrend, so I'm not a buyer. This thing's got a lot of work. Maybe this is a bottom fishing pocket pivot, but it's an oil stock. They tend to be a little bit funky, and negative 49% earnings growth. I don't know. It's a 4 relatives. It's, to me, this isn't really a former leader either. Usually when you're looking at bottom fishing pocket pivots, you're looking for them in stocks that were leading stocks that have corrected. So, even if we're going back to look at Solar City, as you're coming up to here and you have some pocket pivots in here, this thing was a leader before, and it's correcting in a base, and then you get the bottom fishing pocket pivots. Usually you'll see that they'll work in a situation where you've had a prior leader, and you've had, say, NSM corrects, and it has this little sort of pocket pivot in here and moves higher, and so it's turning out of a base after a normal correction following a prior uptrend. So, that's the sort of thing that I look for, and they have to be a big leading stock that's, essentially making a comeback. So to try and extrapolate that into something like Cliffs, that's just bottom fishing. You're at this peak here, that could be resistance, I don't know, but it's not really anything I would be looking at. I don't think you need to delve in that area of the market right now. Facebook, it's acting okay. My guess, you're losing some velocity, and you can tell because you're compressing on your weekly ranges, so it's telling you it needs to base here for a period of time, and you see how that goes. But so far it's holding the 10-day moving average. You're not using the 10-day moving average as your stop. For now, I guess you're using the low of this gap up day as your stop, because the 50-day moving average is way down here at 27.73, so that's not really going to be feasible as a stop. So, I'd be looking for it to hold tight in here and may do that for some time. Somebody's asking, is FB chart pattern now looking like LinkedIn back at November 2011? Point figure. Well, I don't really look at chart patterns necessarily as having to match, and I don't know if Facebook is like LinkedIn, but I guess LinkedIn November 2011 was way back here. So, I don't really see that. I'm not sure what you're seeing. This is November 2011. LinkedIn look like this, and now Facebook looks like this. I don't really see the comparison. So so maybe you have to be more specific with that. Gigamon, thin stock. It's not really growing up, but it's just, hanging out, holding the 10-day moving average. Looks like it wants to come in to me. So it's a pretty volatile stock. I played this, as a tradable move, but it's really hard to play because you have to buy it coming in, then you have to sell it going up, and sometimes just go past where you sold it, which can be frustrating. But on the other hand, you don't want to be caught in a big downdraft in something like that. But it's a thin stock. Alexion, some of this, I've been watching this one, and it's trying to break out of this weird-looking pattern. I don't know, a reverse head and shoulders. I don't know, but it's hanging along the 10 days. It's got buyout rumors. So if you own this one, I guess that's what you're owning it on the basis of some buyout. I know that Onyx, there's a bunch of companies fighting over Onyx right now, and I thought it was interesting this morning they were announcing that I guess Amgen, Gilead, a couple of other companies looking to bid for Onyx, but yet the stock's down on the day. Okay. Gee, you'd think with 4 companies trying to bid for the thing that you might get some sort of bidding war, and this would drive the price up, but it doesn't really seem to do much anything. I know that Amgen offered $120 for the company, and the company thought it was grossly undervalued at that price. So, you did have a viable gap up, I guess, here. It's failed since then. So this is kind of funky, but, I think Alexion, there's been talk of someone trying to buy them, but they can't get the financing, blah, blah, blah. And so, who knows? It looks okay, but I don't think I'm a buyer myself. CF becoming shortable.
I like
Go ahead, Dr.
the earnings report was sound, and then it's just looking at it on a weekly. It looks like it's trying to finish the pattern, the basing pattern here. And the earnings have accelerated, and it looks like, industry group we know has been very strong for many weeks. So, yeah, this is, it's probably worth putting a report out on, but it's still the pattern. I think it needs to do a little bit more work.
Yeah, I mean, you could say you had a pocket pivot right here, and it's up. Maybe, you can buy it, I guess, on this basis. But the movements have been caused by various news announcements about the company being bought out. So that's kind of the kicker for the whole thing. So I think, but the numbers did come in pretty good. I think last quarter they came in with 55% earnings growth. That was a bit of an acceleration. So not too bad, but some of the biotechs are losing their luster here. Biogen starting to look like a late-stage base failure. This is another one that is breaking down through the 50-day moving average. It's undercutting these lows, and I don't know if this is going to fail. This is a cup with handle. Celgene has kind of been coming off, but really here, I guess the 50-day moving average would be support, I suppose, or the low of the gap up day. But it runs up, pulling in, so nothing too exciting there. I noted some of the other big biotechs like Gilead has been moving higher. Amgen, though, these are starting to come off. Regeneron was another one that's breaking down, and here's another situation where you have a late-stage cup with handle. You could say, if you're looking at this, that the handle was wedging. So, but really, this is your first week down, but still, there's a little bit of wedging there along the lows. And then it breaks down. And now what this looks like to me, it's going to do is blow through the 50-day moving average, which would complete a late-stage base failure. And so this is another one that I've got on my short sale watch list. Probably could have been shorted this morning. I'm sure if you're looking at a 620 chart on this one, let's see, you could have probably come in on this. You see it bounce in the morning and then breaks down around just before 8 o'clock my time, 11 o'clock New York time, and 4 p.m. Dr. K time. So you can see that might have been shortable there at that point. And so you want to watch for some of these as they're bouncing. I'm watching First Solar here. Not short it, but you actually got a 620 buy signal, so it's running up now. But like I said, this makes sense given the fact that you undercut these lows. So I'm watching this run up, but 42.25 as it approaches there might be where I get interested, and we'll see what happens there. But this sort of like big volume gap down, I think it tells you this thing's probably heading lower. It's just a question of how far it rallies before it does that. I'm going to plow through some names. NPS. What is NPS? You sure you don't mean NPSP? So NPS. This is one I've been following for a while because it did have a pocket pivot down in here somewhere. Like this right here struck me as a pocket pivot. I think this also qualified, and it's been moving, but it's a no earnings biotech. You have a gap up move today, so it could be seen as a viable gap up. But it's one of those biotechs with negative earnings growth and, in fact, losing money. So there's risk there always, and so I think that's what you're talking about. VIPS is another one. It just continues to move higher, so there's really nothing there. When did they come out with earnings? Have they come out with earnings already? No. I think that's any day, probably next week. Did they come out today?
No, they just came out. VIPS?
Yeah.
Sorry, VIP. That's wrong.
No, August 13th is when they're scheduled to release earnings. So
Tuesday.
Yeah, so I'll be in the hospital that day, so I guess I'll miss that. We'll see. We'll see how I'm feeling by Tuesday. But that's acting fine. I mean, you could sell it into earnings if you have a big gain on it, if you bought the pocket pivot down here, because that thing's jacked quite a bit, and you got to, what? Wow, that's a pretty good profit. What is that percentage-wise, Dr. K? From
like 60%.
32.70 to, yeah. So you could bank some of that going into earnings if it makes you feel comfortable, I suppose. CAT is a short. Well, it might be a short. It's been down for a while, so it's holding along. It's forming another head and shoulders. You notice the right shoulders here below this, so it might be ready to break down. You could try it here and use a stop somewhere around the 50-day up to the highs right up here of last week, which would be like 84, 85. I thought it was a short when we were in the chat room a few weeks ago. I thought it was a short close to the 200-day, and then that Chanos fellow came out in badmouth, and then went straight down from there. So it's always nice to get some help from somebody. Coors is, this is a buy point. I guess you could have seen it as a buy point, and it's just moving up. It's incredible to see this thing making new highs. It's been all over the place previously, but it's moving along, so there's really not too much to think about there. But I don't think it's viable. Dr. K, did you finally get back into Tesla? Were you ever in it?
No, just in the funds.
No, so no.
I've been maxed out on other vehicles, but I like the stock. It's my favorite stock out there. That doesn't mean that I'm going to necessarily switch out of something that's been working.
I thought InventSense was your favorite stock.
Both of those, I would have to say, are, well, Tesla's my favorite just based on its price action, but I like the story on both these companies. Yeah,
I mean, I don't like the way this is acting. I think this is really sloppy, and it's a little bit disappointing to me. On Wednesday, the thing's just getting hit with big volume, and they knock it out. And once it starts to break down like this, I just sell it. I don't really sit around and wait to see what's going on. I don't know if this is a shakeout or what, but all I know is it doesn't act like a shakeout, because usually a shakeout will shake out and then move higher. And so you could possibly just come, if you sold it, you could just come right back in and buy it. But this is acting very sloppy, and in my view, based on this huge volume move, it should be acting better than that. And you're seeing above average volume 3 days here coming down. And of course, you did bounce off the lows here, but you closed below the 10-day, so it wasn't able to be a pocket pivot type of move there, which it could have been if it had closed up, say, or above the 10-day. But it's just very sloppy, So I guess if you want to hold this, maybe it's going to take a lot more time to develop, and maybe the situation with their technology isn't that clear-cut. I know that there is, what was that product you were talking about, Dr. K, that someone had come out with? You showed me a link on that. I'm trying to remember it.
Oh, yeah. It was just an example of how there's been a lot of notice in this type of technology.
Right, but it was another company with their own chips doing this. Yeah. It wasn't InventSense. So there's a lot of competition out there, I'm finding out, and so it may be that this one, it's just not happening. And with the competition coming out, maybe there are some companies that have more compelling technology in this regard and are really going to take this stuff to the next level. So, this is sloppy, and I'm not really I'm not into it. So
The stock needs to do more work before its base.
yeah,
Really,
I mean, but
we're
I'm
hoping
telling you,
that
I'm ready to
uh,
swear that thing off. If
it needs
there's
to. I
ever
think
a
it needs a few more, probably a few more months of work. And if it really does have leading advantage, then we'll see it.
right, but it starts to look powerful, and I would have expected at least to hold tight up there above the 17 price level, and then the thing just like crashes through. So somebody's in a hurry to sell a bunch of stock. I wonder why. Was it insiders? Was it some big institution that didn't really see the story panning out? It is a smaller stock, and so you can get retail investors pumping into something like that. And I know a lot of brokers do like it. You can go on Seeking Alpha and you'll see some brokers who are out there pitching it. But to me, it's just a big pain in the butt, and forget it. BlackRock, someone's asking about. Well, it had a pocket pivot move here, and it's just pulling back. Now it's a cup with handle, but it's a little V-shaped. So this might be late stage too. We like BX, Blackstone, which had this viable gap up, and then you had another pocket pivot. It's kind of tracking sideways. We'll see if it comes out of here. But Dr. K, I was wondering about this. We actually own a little bit of this one. If this had a viable gap up here, it ran up, and now it's pulling back, what would your take be on this? Would you be selling it?
Well, yeah. I mean, it's you had the viable gap up. It's really doing not much of anything. Your exit point is not far from where it's trading right now. So again, if you're in this stock and you don't need the capital in something else, then might as well sit, because you're only really risking a couple percent downside. But yeah, it seems like it's gone to sleep.
Yeah. So another one of these. It doesn't really get any. I mean, you get a little bit of afterburn, but it doesn't last very long. And
Your risk is about 2.2% from where it's trading right now.
Yeah, somebody's asking me regarding the hospital, are you okay? Yeah, I'm okay. I mean, I'm going in for some surgery to have a little thingy taken out. That's a benign little tumor that they found down around my prostate, so I'm just going to go and have that taken out. I'll be in the hospital for a couple of days. And I have the best medical care that money can buy, so I'm not really too worried about it, and I expect to be back within a couple, 3 days. So, but nothing, nothing well, it could have been life-threatening, because anytime you have something growing inside of you, it can start to affect your other organs, and at that point, it becomes life-threatening. So, yeah, this could have been life-threatening had it gone on, but they caught it, found it, and that also speaks to why when you're noticing something or something doesn't quite feel right, you want to go to the doctor and have them take a look at you, because it could be something that is best caught early. And I'm always amazed at people who, and now I'm going to go on a diatribe here, so watch out. But I'm always amazed about people who they know something's wrong, and they just put it off. And the doctor even told me that with what I had and the symptoms that it was exhibiting, most men just don't want to deal with it. They don't. It's embarrassing. They don't want to have anyone messing around with them down around their urinary tract and their prostate, and so they put it off and they put it off and they put it off, and eventually it becomes something that kills them, or creates symptoms or an after effect that is far more severe than the original thing. So all that's to say is I go to my checkups, see my doctor every year. If I start to feel something funky, I go check it out. And if it's a specific symptom related to a specific part of the body, then you go see a specialist in that area. So I just tell everybody, that's what you need to do. So somebody's saying that they just had a prostate biopsy and thank God no cancer. Yeah, thank God, and I'm happy for you there, Dr. Q, because that's the same situation with me, is that they wanted to make sure it wasn't cancer, which it's not. It's just a benign fibroid-type tumor, and a fibroid is just like a random growth that can occur. So, so I guess maybe you'll have to have yours taken out. You'll have to remove that tumor or whatever it is you got there, or maybe even cut your prostate out. But, whatever. The medical technology is light years ahead of where it was. The last time I was in the hospital was when I was 20 years old. And I had surgery to repair a detached retina, which sucked because I had to have eye patches on both eyes because I couldn't move my eyes for about 3 or 4 days. So at least in this case, I'll be up and able to at least hopefully look at my laptop in the hospital on Tuesday. So anyways, thanks for all the best wishes from everybody. I know just want to let you know, 4 p.m. on Monday, Pacific time. That's when surgery starts. I want everybody to gather around, hold hands, and sing Kumbaya. And I'm sure that will help me out greatly. But you know what? I would just say, since I'm a believer in this sort of stuff and positive thinking, that just everybody send me the best possible energy you can at that time of the day. So if you can set your alarms or whatever, your iPhones to that time, and just send that along, I'd definitely appreciate it. Because as far as I'm concerned, it may be a bunch of bunk, but it certainly can't hurt. And hey, whenever you're going under the knife, you'll take anything you can get. So my wife tells me I'm being a wimp.
I've read some books, one by a Stanford professor that carried out a series of experiments over many years, and they showed quite conclusively in laboratory testing that intent, when you send positive intent to another person, it actually unwinds their DNA. In other words, it reduces the entropy and is therefore manifests as something healthy. And you can do this from a distance. So couples that are in different cities can send this intent, and the results are the same. So in other words, it's almost as if distance doesn't matter. And that speaks to what some quantum physicists are studying and carrying out studies today about how, what is this, we define as space. That maybe it's a incorrect interpretation of what space really is, that it's actually a continuum, and that if someone's a million miles away or next door to you, it actually doesn't really matter.
Yeah. No, I agree with you on that. I know we're getting a little bit off topic here, but I think it does relate to trading as well in terms of the whole psychology of thinking positively. And even if you consider, if we're a community of traders, if we think positively as a group, I think that helps the group in general. And if we treat each other, on the chat room and whatnot in a positive manner for the most part, and approach it positively, because I think, we get people emailing us and they don't like the MDM signal, and oh my God, you think that we did it on purpose, a bad signal, and they don't understand that when they do that, they're creating negative energy that will impact their own trading. And I'm going to bet, there have been people out on the internet that have attacked both Dr. K and I, and that comes with the territory. Bill O'Neill used to get attacked, but I think that those people are really cutting themselves off at the knees by spewing that sort of venom and negative energy, and it's just a bad thing. And I have to admit that, speaking for myself, it's been a point of growing up as a trader to lose the ego. People want to argue over stocks, and then they become ego arguments over stocks. And you're all just feeding this negative beast, and you don't want to do that, either way. Even if something frustrates you, if you feed the beast will just consume you, and so you have to find ways to quell the beast and to reverse the effects. So, bad trade, you lose money, use it as a positive experience or turn it into a positive experience to figure out what you did wrong and how you can improve, and then focus on visualizing yourself improving. In other words, let's say you just screwed up, and you say, oh, well, here's what I did. You identify the mistake, then go through a visualization process of yourself redoing the trade and doing it right, and being successful and feeling how that makes you feel. And I find that's a pretty good exercise to do as a trader. So, so remember that. And those of you who are prone to wanting to get into ego arguments with people or to slash other people, like if you feel an impulse to make fun of somebody or just to slam somebody or attack them, whatever you think they did or didn't do to you, you're only hurting yourself. And I really emphasize that because it's something that over the last few years since leaving O'Neill, it's something that I've had to grow beyond. And I think a lot of people still need to grow up in that regard. And even to the point where if someone's out there on the internet attacking you and you engage them, that also becomes a negative process. You need to just blow them off and focus on positive aspects. So, all that to say is Monday, 4 p.m. Pacific time. Feel free to shoot me over some positive thoughts, positive energy. Dr. K, that'll be midnight in London, so I'll be expecting you'll be holding a guild surgery party with all your friends and have them all over and holding hands and singing Kumbaya on my behalf.
Lots of glow sticks.
I'm going to say that again. 4 p.m. Pacific time, 7 p.m. East Coast time, midnight London time. So everybody, let's see if we can make this work. And maybe I'll be out of the hospital on Tuesday morning. Yeah, that'll be a fat chance. Anyways, Also, for good luck, I just want to point this out. The doctor I have is one of the best urologists in the country, and his last name, I'm not going to mention his name just to keep his privacy, but his last name starts with a K. So I do call him Dr. K. So, and I consider that a good sign. So, anyways, where are we? Where are we? Let's get back to some stocks here. NUS, New Skin. Hanging tight, no real buy signals here. I mean, you had a pocket pivot here, so it's just kind of cruising higher. I think they had earnings. The stock looks okay. Let's see. Dr. K, you have mentioned XIV as a profitable trade in the chat room. Can you provide any insight into how we can use XIV?
Well, I use it. I use it with the UVXY model, but and you can also use it with the MDM. As I said in one of the reports recently, hindsight's 20/20, but based on the buy signal from quite some time ago, back in 2012, you know, this just sat in this position, and of course, knowing that the markets would be sloppy in an upward grinding fashion is impossible to know ahead of time. But the point in I'm making is that with quantitative easing, when it's the way it's been, corrections are usually contained within several percent. Therefore, something like XIV, you could sit in this thing because there's a tendency for VXX, its counterpart, to trend lower. It has its occasional spikes when the market sells off, but it overall can trend lower. If you look at the weekly on this, it's very pronounced how much it likes to trend lower, and XIV is the inverse. So XIV likes to trend higher, and I'm obviously with the UVXY still being in beta, but I've been working out how maybe best to utilize the UVXY signals, because obviously on a buy signal from UVXY, that's where you'd be shorting XIV, and when you sell UVXY, you'd be buying XIV, and right. So yeah, there's a lot of promise in what the UVXY model has potentially here. And you know, people have asked when is it out of beta? Well, I'll know when I know. But right now, it's still you know, the last signal went very, very well, and right now it's in cash, and so we're gonna see what happens going forward with this tug of war between quantitative easing and versus the tapering versus the recovering economy. And if there's lots of cross currents and it seems like the market's not going in any particular direction, it's probably best the UVXY sits in cash during such uncertain times, since, you know, because the UVXY is incredibly volatile. But UVXY, like the VXX on the weekly chart, you'll notice is a very pronounced bias toward trending lower. So the model keeps that in mind.
Okay. Let's see. I love all the comments coming through about ego and how you think and health issues.
Oh, that's great. Yeah, you know, I think there's a lot of there's a huge huge interest in actually the nature of, say, spirituality and holistic living in conjunction with what you do in your career, what you do as a trader, how you think in the markets, and also your personal relationships with friends and family. And in other words, Ed Seykota drove this point home to me back in 1997. His point being that what you do in one area of your life will affect all areas of your life. So you better be consistent and live what he calls right livelihood, which is just a short form of saying live in an ethical manner to yourself and to others in everything
right.
you do.
Winnebago, here's a stock. It's run up, it's gone side, it's trying to break out, it's failing. I don't know, maybe do you buy it back? It's a thin stock though, so it's not one I played. But if you bought it on this breakout, obviously you're underwater, so you need to think about what you're using as your stop. I guess, you know, the 50-day is what really comes into play here as your ultimate downside selling guide. So I'm not sure what to make of that. Somebody asked, would you chase HAR? Is this the old Harman Industries? Would I chase HAR? I think that's a kind of a random question when you ask that. You know, will we chase it? Oh yes, we would chase it. We just jump all over it because there's no, who cares if there's no buy point? There was a buy point here, I suppose. This is a pocket pivot, but it got extended very quickly. So, our rules would dictate that you do not chase something like this. This is not. There is no basis for chasing anything. You have buy points. If you're within range of the buy point, then you buy the stock. Once it gets up there, you don't chase it, because remember, you're feeling an urge to chase it. So you're asking us, can you chase it here? And if we said yes, you can chase it, what would you do? Go in and mortgage your house and buy a whole bunch of shares? No. But what that is, think about this, is that when you're saying that and you're wondering whether you should chase it because you're seeing it move, it's like, oh my God, this thing's running like crazy. And of course, it's had 2 big up days here, and of course, it's entitled to 2 more. So I better get on before I miss it. And so what's going on in your head? Greed. So watch out. You stick to the buy points. If you caught the buy point, great. If you didn't, leave it alone. There's no basis for chasing, and chasing is a symptom of greed. The desire. So somebody says this part of the webinar about holistic thinking, positive thoughts has been fantastic. Just because we can't touch or feel something does not mean it exists. Everything is energy. I totally agree. And Dr. K is a nuclear physicist would definitely vouch for that. Here's Centaurus.
Yeah, it makes me really, it really energizes me and motivates me for the next book we're going to write, since it's going to deal with a lot of these aspects.
Which we were hoping to get started like in August, September, but I think I'm going to be recuperating for a period of time, so that's going to get put on the after or the back burner for now. I was also scheduled to speak at the American Association of Individual Investors at Skirball Center in West LA, near the Getty Museum off the 405 there in the Sepulveda Pass there, for those of you familiar with the area. But I have to put that off too. I think that was September 11th. Mainly because they're just telling me that I should take it easy for several weeks, and that after 6 weeks I will be at full strength, and it's best to just take things slow. So that's what I intend to do. I'm not going to be one of these idiots who thinks you're going to run out and play Superman again right off the bat. So, but Centaurus, continue to hold. Here's what I would say. If you look at the pattern, you got viable gap ups in the pattern. Let's see, how many so far this year? 1, 2, 3, 4. Actually 5. Is that right? I might count 1. No, let's say 4. No, this one, yeah, just barely cleared. So actually 5. I thought I was counting 4 before. So you've got the 5th gap up in this pattern. It could be long in the tooth at this point, so maybe the stock would need to base or something. But would you hold, Dr. K?
I would, yeah, absolutely. I mean, the uptrend's intact. It is getting long in the tooth, but unless it undercuts that gap up by say 2%, I'm going to be a holder.
Okay. Light in the box, rather. What is it? Light, LITB. Yeah, got to get this right.
Light in the box.
Well, we reported on a viable gap up. It came in and quickly violated that, but it's a thin, tiny little stock. Trades. It's even hard to say what it trades. I'm going to guess somewhere around 500 or 600 on average, but you have been getting some big volume and it's moving. So if you bought this and gave it a lot of leeway, because I believe that the low here is 1833, the low here is 1730, so that's a good, that's more than 5%. So I'm not so sure that one would have held that possibly. But if you understand what you're dealing with, which is a very thin, very tiny stock, and it's a Chinese stock, maybe you held, but it's moving out, but there are no buy points beyond this gap up move. There was a pocket pivot here, was there not? Yes. Did we report on that pocket pivot? I think we did, didn't we?
Let me see. That was a period we were reporting on a bunch of things. 1 sec. Let's do a quick scan. Yeah, we reported on it on August 7th.
Okay. S-Fund. This one's just up and away. It's a thin stock, trades 362,000 shares, so another, this is another Chinese stock, and so it's a little bit thin, but this is up there, so I'm not sure what we can tell you. I guess you would call this a pocket pivot also because of the fact that you did close at the 10-day and then you gap up slightly. Not sure if that would be a viable gap up per se, but it is another pocket pivot. So just stair-stepping its way higher with these 2 pocket pivots over the last couple of weeks, and so that's acting fine, but it's a thin stock. Someone's asking about Alexion as a pocket pivot. Well, that was a pocket pivot right there, so I think we already talked about this. So let's see. So we've gone past an hour. Any last questions anybody want to spew at us? So, you get a sense of the market. We're trying to come back. It's just kind of back and forth. When we were down 100 or so, I guess Dr. K was thinking that you're at the point where you could see the QE support come in, and certainly you're seeing that. There's some situations that are acting well, some that aren't. So, showing you a couple of names here. It's SC2I. I should probably put REGN in here so we have it up there next week. Some of these things are looking suspect, whereas other things are kind of hanging out. Not a lot of afterburn and a lot of these gap ups. Doesn't necessarily mean they're in trouble per se. But just to finish off here, someone asked one last question. A couple real quick. Yandex. Too choppy of a pattern. That is a choppy pattern. If you bought it in here, I guess you're good and it's acting well. But it is a choppy pattern. I don't know if you're up on it. Suppose you can hold it, but it doesn't really strike me as being all that exciting. So, but someone asked, concerning the 6-day rule, any violation including intraday? In other words, how does a 6-day rule differ from a 0 to 5th day violation of a BGU?
Well, the 0 to 5th day, well, 1st to 5th day, if it undercuts by, say, less than 2%, of course it's contextual with the stock's volatility, but let's say the stock would be sold at 2% under the, if it undercuts the low of the viable cap up day, that would apply to day 1 through 5. Day 6, the stock's had enough time that it should have started into a move, and so if it goes below the low without any porosity, I would be a seller.
Okay, so that's the difference. Once you get past that 6th day, on the 6th day or later, and it just kind of breaks down, you would be out. So, anyways, somebody asking you to elaborate on your research of element 110. I don't think we have any time because we're basically out of time for the day. But I'll be fine next week. Somebody's asking if I'll be okay to attend next week's webinar. I plan on being here by hook or by crook, so we'll probably Thursday or Friday, possibly next Friday, because I think for sure I'll be out of the hospital. Well, it's going to depend on when I get out. If I get out Wednesday, then we'll do it Thursday probably. If I get out Thursday, we'll do it Friday. But in any case, for those of you who are on the chat room, I'm going to try and be on the chat room as soon as I can. So you can watch for that. And again, everybody send me your positive energy on Monday at 4 p.m. Pacific time. And we'll see how things go. So anyways, c'est la vie. That's all I've got. You got anything, Dr. K, or are we done?
No, I think we're good.
All right. All right. Thanks, everyone, and we'll catch you next time. Take care.
So long, everyone.